Good morning. Okay. Well, we'll see if this positive start to the day and week, how far it goes. Some things more positive than others. This reversal on the Russell obviously was impressive, but totally in opposite of what was happening in technology. And we'll see if technology can regain its footing. On Friday, it certainly looked like things were, as far as that goes, we're going to continue to go lower. And a lot of mixed messages as far as the markets agreeing with each other at the end of the day on Friday. And the trading on Friday was a bit insane, to say the least. The up-down moves. So this big green bar, which we have something similar in the transports, is a type of a continuation pattern. I mean, the gap down in a wide range bar like that and closing at the high is a powerful bar. Now, if it had happened, after a pullback, that would be viewed as a no-brainer long signal. But here it's after it's moved up into resistance. And it could be a continuation pattern, but they just historically don't set up right at an area of resistance like this. More so, it'd be more likely to chop sideways for a while here and consolidate, even though it's opening higher here today. You could see it's at almost 155, so gapping up right into this cluster of supply to the left there. So the gap up from a bar like that isn't unusual. How far is it going to go with this resistance right here? Now, if it can hold on to the gain, that's obviously going to be a positive. And you can see those overlapping bars right there. And as usual, right, well, below that low, clearly it failed. So our factory work says, just even from a swing trading perspective, just eyeball the middle of that bar. You don't have to measure it. And over the next day or so, as long as it keeps closing above that midpoint, things are bullish. And it's consolidating within that bullish reversal bar. And of course, with that congestion to the left, it's more bullish confirmation. So it's gapping up, as I said, around here, which 55. Okay, so it's got this void below, right? We got a wide range bar. So that's the next thought, right? I call things a thought process as part of master trader technical strategies. When we look at patterns, one concept, wide range bar, right? Bullish wide range bar, is one piece of information. In of itself, it doesn't mean a whole heck of a lot. So now it's gapping up into this resistance. Now, as I look at the inside of that bar, it started the move right from the get-go in the morning, right? The gap down. And then it spent 4 hours or so going sideways, which means it left a base at the end of the day versus something that maybe started lower, went sideways here, and rallied straight up. So meaning now that it's gapped higher, it has a area of support below if prices pull back as a reference point for buyers to purchase or step up. So it's opening up here, and should it pull back here, you've got sometimes I call a line of defense when we talk about credit spreads. Line of defense here where buyers would step up on a pullback into there and see if they can hold this area. So that's one thing to be looking at, to be aware of as far as the Russell. The transports, we don't get the intraday data, overnight data, I should say. And it's a little more thinly traded, but we can see the consolidation And you got this head and shoulders top. Now, if it can get above that high over here, or even close to it, that begins to negate this distribution pattern. And that becomes obviously bullish because distribution patterns are bearish. And so if it breaks below here, well, you know what's going to happen. And it breaks the neckline and down it goes. Put spread for Friday, 150. Which, oh, IWM. Let me go back to it. I wouldn't bet on that, Trader McGraw. You know, right now we're starting out on a positive note. I wouldn't, I would wait at least to this afternoon to decide that if it can hold on to the gain. You know, that's pretty far away. And you know, this Mr. Schizophrenic market, you know, if things get ugly, and especially if they go down there, as I said, well, let's say if you do it, okay, let's just say, hey, we're going to do it. We think that the bar is going to hold. Well, you know that if it starts coming down past that halfway mark, you got a decision to make as to whether you want to hold on to that. But, you know, like Alex is saying, a little patience. I think, you know, it's Monday morning here. We can wait a little while and see how things develop. Okay, TJ, so they're up this morning. Everything's up this morning, right? Doesn't mean they're going to stay up. Give it 20, 30 minutes. Let's see what happens. You know, we don't have to be the first to what could be the party. It might be another bull trap. Let's just see what happens here. You know. All right, let's continue here. We do spiders? No. Okay. So this was actually down after the close, right? Like we're you probably can see it here. But you can see after the close, prices went down. And for whatever reason, they're up here today. I didn't read any news, but market wakes up in a happy mood after the weekend, after Friday's insanity. And so 336, you know, inside the range, no big deal. Right? It's a good start to the day, but it's neutral. And we'll see which way this goes. Clearly, it's got to get above this 338, 339 level to even begin to make us think that this is going to continue higher. And it's got, you know, I mean, it's just got the next level of resistance right there. It's not like it's far away, but if it was to close up here, negating Friday's topping tail bar, we could start to lean on the bias that it can get through that, right? So this is neutral. The futures are dead neutral, right? So you know what happens. They get below last week's low. So we've got two congestion areas. So what does that mean for SPX? That means you got two lines of defense if there's premium up above 34.40, which typically that should be a no-brainer. That should be a no-brainer. Come on. Stimulus is not dead. Trader McGraw. That is like, come on in. Everything's okay. You know, like the check's in the mail, right? Nancy and Chuck and the Republicans are going to play nice here. Not going to happen. So that's a BS headline, I think. So anyway, 34.40 should be a no-brainer today. Down below last week's low, 32, let's call it 32.80 or below. Those are our two levels. Or you can look at SPX and you know, just look at those reference points. So 32, 34.25. Well, you know, you're below the second line of defense there, but Okay, maybe. And 32.95. Okay. Yeah, below the gap fill. So on the downside, you've got the gap, and you've got last week's low. So I like those levels. Yeah, well, I mean, you're liking the put spread better makes sense because you're starting higher, and then it's got that much further to fall. But if you get above 34.40, if there's any juice there, and if it goes up in the first half hour, 34.40 just may have the juice. Asking because you said wait 20 minutes. I Mark in YouTube's asked, should we hold on to our advisory trades at a hold off? I guess Dan said wait 20 minutes. So if he's saying wait 20 minutes, that means wait 20 minutes, Mark, but he can expand further on that when he comes on. Okay, let me get through this here. YM. That's just a good picture of what's going on lately. Topping tail, bottoming tail, topping tail, bottoming tail, inside day. What I wrote in the letter, Alka-Seltzer, please. Yes. Trading was ridiculous last week, but, we say it is what it is. The back and forth there, just looking at SSO here, gap up, try to move down, up, down, pretty much ended where it started the week. And again, the Russell just moving up, but up into resistance there. And bonds, keep an eye on this. Here we go. This is, I'm telling you, keep an eye on this here. All right, this is starting to roll over. And I pointed out in the letter, in the advisory, in the ETF letter, these bottoming interest rates. And where are they? 16.10, right? They're gapping above Thursday's high. The market is going to take notice of this, that interest rates are moving up. And while on one hand, that's a positive, markets always get a little edgy when interest rates start moving up, even still when they're historically, as low as they are. But, keep an eye on that. And look, our market internals here. Breadth is getting close to bearish. And it's still got some room. So what today is going on, it's fine. And sentiment, well, what I wrote about in the letter was, while this looks to be, neutral in a sense because of where it is, where you can see the highs and lows there. And it's because it has been so extreme here where so many calls are being bought. So historically, this would be bearish. I don't know. I don't think it can go all the way back up there again, but of course, who the hell knows? But this being up here, a little bit more of a push higher, and this a little bit more of a push higher, and you've got a sell signal. Now, sell signal doesn't mean crash. It means correction. Right? So we'll update that as things happen, but most likely if the market does hold on to its gain today, those will move into a bearish territory. Crude oil, come down to support, big move up. So overall, things are bullish to neutral here. Overall messy patterns. Gold holding on. I really want to see it get back up into this area, and then we've got a downside shakeout. That'd be very bullish in alignment with the higher time frames. There's a little bit more time to develop. And silver kind of grinding its way up. Could be a bear flag. I don't know. Just need more information. When its pattern doesn't make sense, wait for more information. Pretty simple. All yours, Dan.
Well, Greg, do you want to answer Gary on sentiment?
Total put call ratio, Gary. 5-period moving average of the close of the total put call ratio.
And those bands, Gary, just show, over time the high and low levels, and we're looking for them to be in alignment, sentiment and breadth.
Yeah. If you want to set those bands up on your own chart, email me. I'll give you the parameters. Nothing proprietary. We don't sell indicators here.
All right, so all of our opens are fine. We started trimming. Had a great week in both letters, and so everything's fine. If you have a question, ask me. We have a lot of new trade ideas too. So let's just go right to gappers or any other questions you have. Did we go? Yeah, Ali, he went over everything, of course. So the Qs, I mean, everything's a mess. So it's pretty much the same. The Qs have been the weakest of the four horsemen of the last week. And that's because they've been more overbought. So we have a bearish close, bearish topping tail, and all these tails are not real. I don't know why.
Use T triple Q, Dan, and you get I know, it's not exactly the same, but.
Yeah, so see the tail didn't go as high. So that's a very bearish bar, suggesting, topping tail. If we were to open flat today, I would say just short Friday's low. It's a continuation. I mean, look how we closed it and sold off hard, kind of a bearish descending triangle here, closing weak. That just looks like it wants to continue lower. So now we're gapping up to resistance, this 15-minute resistance, and we're going sideways. So for day trading, my bias is this simple: 30-minute high, long, 30-minute low, short. That's simple. And if it goes long, then it's really just a day trade. But if it's short, then it could turn into a swing. Let's see. YouTube's asking about rocket seems to be going higher. How about add more to our position? Yeah, we have Rocket Man. Yeah, we have two positions on this. We're long stock, and we also have a put spread. It looks fine. Yeah, I mean it's a kind of a weird looking 1, 2, 3 with the gap down and then closing at the highs. But 30-minute high, I'm doing nothing at the open here myself. Yeah, and I don't know why Greg said that I told him to wait 20 minutes. No, I would never use the word of wait 20 minutes. I've told a number of people our 5-minute high, which is in our trading the open document in resources, that we don't trade the first 5 minutes. Wait for it to trigger after 9:35. And then another rule is if something gaps over or under a stop, then we use the 30-minute rule. So this looks obviously not same pattern, but space here looks higher to me too. We have a put spread on this. We did it on the gap up day, came in, bobbled around, closed at the high. And this looks like a good, I mean, it's gapping up here, which, gaps are good and bad. Gap could be a new trade setup for a gap trade, but if I'm trying to get on board, I also look at it as how much of my potential target is it eating up. All right, let's just go to this list. Costs had a little retest pattern here. Gapping up to 170 coming in. It could be worth a watch, see if it does a W bottom retest or something. Lithium, some of these lithium stocks are doing well again. So this one did 100% retracement, gap reversal, but similar to what Greg said, we like these gap reversal continuations, not at resistance, closer to support. Again, $19. It's just gapping right to resistance. I mean, I don't know what to do with that. Look at this little guy might set up. Yeah, lithium. That's why I looked at it for you. Hey, my greenies, not the greenies is somebody typing to me as a new member. If you can put your drop down to all panelists and attendees. Greenies, I don't know if it's a him or a her. It's asking me about Roku. But this little guy, remember this thing went vertical, SPI? Yeah, we talked about this in our climactic MT Live. I think it's the one where I said $1 to 46 in one day. Really? And I don't know. It might give you a nice day trade over a 30-minute high if this is working on the turn. Roku. I mean, Thursday was a better entry, Thursday or Wednesday. It's at all-time highs. It is a bullish gap. It's gapping here to resistance. So I'd say day trade, 30-minute high would be fine. AMRN, bio day trade scalp. Okay, what time frame and what's the pattern and where's your stop? I mean, it's extended now on the 15, so that's my question. Where are you going to enter and what's your stop? HGen is also a bio, but this is a nice gapper. I would be all over this. Well, McGraw, I asked you 2 questions and you didn't answer either one of them. I said, what's the pattern and what's your stop? So this is a fantastic gapper. Gapping right over this multi-week trading range. It's a bio. I have it here in the bottom right, and I'll keep an eye on that. $4 stop. I don't know where you get $4 from. Yeah, I wouldn't touch it. I mean, you aren't following our approach unless it sets up on an intraday time frame. And if it's a scalp, you called it a day trade scalp. I would never in your wildest dreams have a stop at $4 for a scalp on a 5 or 15-minute chart. Just makes no sense. I mean, I need a pattern. I know that might sound foreign to some of you, but we are pattern traders. I got no pattern here. You can put it in a window and, talk to me in 30 minutes. And Daku, we're actually still in this one. We have a covered call and a put spread. So I see that gapping, so that's good. Plug. Let's see this one, when we're talking about gap reversals, Greg mentioned the IWM, I mentioned the LTHM. Here, look, compare these two. So this one's much farther from major support, the gap reversal, than this one. Do y'all see that? So this, because here's my major support. I got 3 bars right here. It's not a pivot the way we define it, because it doesn't have 3 higher low bars to the left, right? I get that. But that's my bullish gap. And then it went sideways at resistance for 2 days, broke out, gap reversal. So this looks fantastic. Plug. So the only thing I don't like is, gapping up 55 cents is, I'm just doing the math in my head, is 3%. So, it is what it is, but I like it. So it's going there in a watch. Is now a pattern you stay away due to outside day? No, why? No, we like outside days. you know, it's another one of these things that I have just, that I've been talking about, which is it is a gap reversal, but it's at resistance. So I like plug better, but if it sets up as an intraday trade, that'd be fine. So just keep an eye on it. Region here is a bio that has given Trump some of their drugs. And I guess it's up because Trump, I don't know, was saying he liked these, whatever, I don't care. All right, dunking here. See, now here's another example. It had a bullish gap reversal on Friday, but it's far from support. It's far from the 20. So I wouldn't touch this as a swing. Yeah, these are on the market indices now. These are all beautiful gaps on the 15-minute charts. Diamonds, Qs. Qs are weaker again. Let's stay away from them. You know, the problem is resistance, but these are beautiful 15-minute charts. Oh, power, we entered a half lot on Friday. That looks great. That see another gap reversal, just what I was talking about on plug. A little different, but the gap reversal is on major support. That's what that makes that look great. But you know, don't get, well, a tick. Wow, tick 1400. Surely not buying into this. CLDX. Yeah, that looks great. Looks great, Sanjay. Little bull consolidation on the top, but that looks fantastic. I love it. I think that's a buyer though, right? But the pattern, pattern looks great. McDonald's. Well, no, remember we use a 5-minute high, Tehran. It gapped over the entry. Well, actually, we're not buying the stock. It was a put spread. So if you can get filled on the put spread, then yeah, because I gave it to you as a limit. So that's fine. Because if it then takes out the 5-minute high, you're not going to get filled on the put spread. But yeah, so you can, if you get filled. Oscar Charlie, I liked on Friday. Remember, there's another one. The gap's messing it up. That's the one on Friday. You know, the market closed weak. And I remember saying, if the market were not closing weak, this would have been a beautiful pattern to enter ahead of the weekend. Beautiful. Ascending triangle. We were doing scanning, and these are in the building materials. That looks great. Space, yeah, space looks higher. I talked about it. Xerox, are they still in business? It's right there at resistance. I'm not crazy about it. Look at plug. Plug, I said I'd love that pattern. There it's going. Power, we're in. All right, all our opens are fine. A car was along, also building materials over the high. DHI is on my list for a put spread. BMCH, another building material. BECN, building material. See there, so here's another example of a beautiful gap reversal on support. So yes, if there were a gap reversal after the first bar, then I would have said, no, I don't like it because it's far, because then here is my support, it's at resistance, but this is a gap reversal after 3 sideways days. Yeah, FCX, yep. Yep, that's a, looks like a long and a put spread. I like them both. ESTC. Yeah, we actually took our money on Friday. FANG department, Netflix is the weakest. Negated that big green bar. That looks like it might be heading for that gap fill. Apple 15 is not bad at all if the Qs hold, but I'm doing nothing. Facebook, yesterday's low looks like a short and a bear call credit spread. Arun, did I go over it? Yeah, I talked about it twice. I mean, we're already in it, so I don't know what your question is now. I said it looks good over Friday's high to add, but you know, it gapped up. It gapped up, and I'm not chasing. I'm not chasing longs with the, you know, the opening tick 1400. ITB is housing. That sector looks good. SIG. Here's another example of a beautiful gap reversal on support. Do y'all see the difference? What I guess this has been a great topic today. Great topic, gap reversals, which are quality and which are extended. Gap reversal on support with a price void. Hassy, yep, and it had a gap reversal. That looks higher, breaking out. Now it's not the same as some of these wide range bars on support that I've been talking about, but this bottoming tail and then Friday's inside day with a gap reversal, in essence, was the continuation setup, and that looks like all-time highs. SNX. It's strong, but it's too far from the 20 for me. It's too extended. Yeah, I like these, like, again, this has been a great topic today. I like these wide range gap reversals close to support. Nail, yeah. Yeah, if the nail put spread triggers, that's fine. Infi, too big a gap? No, I mean, it's a ADR, but no, that's not too big. I mean, a day trade, the stop is the pre-market low. Swing trade, it has to be Friday's low. But no, I don't look at really percents of a gap. To me, it's a total visual. And relative to this, and you had a bull island reversal, no, that's not too excessive to me. XPH, yeah, there's just no pattern there. What a big hunk of mess. Overstock is, you got a put spread, it's doing nothing. At least we're back in the profitable territory on Overstock, even though it went against us. I love that. Square,